Hey everyone, welcome back to We Are Cosmic, the place where we break down cryptocurrency like professionals, but in a way everyone can understand. If you're new here, smash that subscribe button and hit the notification bell because we're about to dive deep into what's really happening with XRP in 2026. Trust me, this is not your usual price chart panic video. Right now, a lot of people are looking at their exchanges and seeing red candles everywhere. XRP is down nearly 50% from its peak in July 2025. If you're panicking, you might think the token is in a death spiral. But here's the secret that most retail traders are missing. The on-chain metrics and adoption numbers tell a completely different story. While the price is down, the XRP ledger is quietly experiencing its fastest growth phase in years. Let's start with the first mind-blowing fact. Over 500,000 new wallets have been created in just the past few months. This is huge. It shows that people aren't leaving the network. They're joining it, in the middle of what looks like a price crash. When we compare the price line to the wallet creation line, they're moving in opposite directions. Experts call this a scissor effect, and historically, this kind of divergence precedes major market reversals. In simpler words, this could be the calm before a massive rally. Now, some people might say, this is just retail hype. But this isn't random buying. This is calculated accumulation by smart investors and institutions who understand that utility eventually forces price discovery. Back in October 2025, during the flash crash, retail traders panicked, but while everyone was selling, the ledger quietly added hundreds of thousands of wallets, proving that strong hands were quietly accumulating XRP. Let's talk about the $1.50 level, which has become a psychological battleground. In February 2026, XRP has been holding between 143 and 163. This is not random. It's a baseline of institutional support that did not exist in previous cycles. If you want to survive this shakeout, you need to treat your portfolio like a business, not a gamble. Forget guessing. Focus on understanding the network and where the smart money is moving. For those of you who want to get a professional edge, there's never been a better time to learn the fundamentals of market analysis. From Elliott wave theory to risk management, 2026 is the year of professionalization. You need to stop being the liquidity for big players. I'll also drop links in the description for tools and courses that can help you understand this deeply. Now, let's look at historical growth trends. The XRP ledger recently reached 7.5 million unique addresses. This is not just a number, it's a signal of massive organic growth, especially considering the temporary price suppression. Exchange reserves are at a 7-year low of just 1.7 billion XRP, meaning the supply is drying up while demand is increasing. 500,000 new users aren't joining a sinking ship. They're boarding a ship that's finally docked at the right port. This is what I call the hidden adoption story. Retail traders are distracted by short-term price volatility, but the underlying infrastructure is thriving. Daily transactions in January 2026 surged to 6-month highs, ranging from 1.45 million to 2.68 million. This proves that new wallets aren't just created and forgotten, they're actively being used. The XRP ledger is growing faster than it did during previous bull runs, even when the price looked weak. Here's a simple way to think about it. Imagine a city. The price chart is like the traffic lights. It can change color and scare people. But the number of new houses being built is a much stronger signal of long-term growth. XRP is building houses, not just flipping lights. Price and utility can move in opposite directions. The chart may scare you, but the adoption numbers are screaming opportunity. The 500,000 new wallets, low exchange reserves, and active daily transactions all point to institutional accumulation and long-term growth. So here's my question for you. Are you looking at the price and panicking, or are you studying the network and positioning yourself for the next phase? Comment below with your thoughts, and let's get a conversation going. I want to hear if you're seeing the same divergence in your charts. First, let's talk about the 500,000 new wallets that joined in early 2026. These aren't just casual users opening accounts, they're active participants. Daily transactions have been climbing, reaching 1.45 to 2.68 million per day, which is the highest in 6 months. This activity shows that the network isn't just growing in numbers, it's growing in utility. People are actually using XRP to move value, not just holding it like a speculative token. Now let's zoom in on the whales. The accounts holding large amounts of XRP. From January to February 2026, wallets holding between 1 million and 10 million XRP increased steadily, with 42 new whale wallets appearing. While retail traders were panicking during the dip, these whales were quietly absorbing the selling pressure. This is classic institutional behavior, buying while everyone else is scared, creating a strong foundation for the next market phase. Exchange reserves give us another big clue. The total XRP held on exchanges dropped to 1.7 billion, a 7-year low. When supply on exchanges drops like this, any increase in demand can rapidly push the price up. Essentially, there's less XRP available for sale, and smart money is positioning for the future. This combination of rising wallet counts and declining exchange supply is known as a supply shock, and history shows it often leads to parabolic price moves. But the story isn't just about holding XRP, it's also about making XRP work. The release of the XLS66 lending protocol is a game changer. Large holders can now lend their XRP as collateral without selling it. This means whales can earn passive yield while still keeping their positions. Instead of waiting for the next moonshot, institutional players are building a financial ecosystem around the ledger. This is exactly the kind of structural shift that leads to sustainable growth. To understand the magnitude of this, imagine a traditional bank versus the XRP ledger. Banks settle trades slowly, usually T+2 days, but the XRP ledger can settle transactions in under 5 seconds. For institutions like LMAX Group or Standard Chartered, this is a mathematical necessity, not a speculative bet. They're adopting XRP because it's efficient and reliable, not because they hope the price goes up tomorrow. Another metric to watch is the ETF inflows. XRP spot ETFs, like Grayscale's $40 billion fund, have been seeing consistent inflows for 55 days straight before minor consolidation in January 2026. This shows that institutional accumulation is far outweighing short-term selling. These funds don't panic, they invest for the long term. When you combine ETF inflows, whale accumulation, and low exchange supply, it paints a clear picture. XRP is positioning for the next bull cycle, even if the retail crowd can't see it yet. Let's also talk about escrow and supply pressure. Every month, about $1 billion worth of XRP is unlocked, and roughly 300 million tokens enter circulation. Critics argue that this creates constant selling pressure, which keeps the price from reflecting the growing utility, but here's the key. Institutional players are absorbing this supply using strategies like lending, vaults, and ETFs. This neutralizes the dilution effect, ensuring that XRP's long-term growth isn't stalled by temporary unlocks. Even with all this, price action can still be confusing. The token remains below its July 2025 peak of $3.65, which puzzles some skeptics. But remember, utility growth leads price growth, not the other way around. The ledger is actively expanding its user base, onboarding 500,000 wallets, and integrating new financial products like XLS66 and RLUSD settlement. The foundations are being built now, and price will eventually follow utility. Finally, a critical point about risk management. The XRP ledger is maturing, but the ecosystem isn't perfect. There was a backdoor discovered in the XRPLJS library in February 2026, highlighting that even mature networks can face technical risks. This is why you should diversify across multiple KYC-approved exchanges and never keep all your XRP in one place. I'll link my trusted exchange list in the description so you can set up redundant wallets safely. First, let's talk about the Ripple National Trust Bank, or RNTB. This isn't just another crypto project, it's a regulated institution bridging digital assets with the traditional banking system. By mid-2026, Ripple expects direct access to Fedwire and FedNow, the payment rails of the Federal Reserve. This means banks can move money instantly using XRP as a bridge currency, all while staying fully compliant with regulations. For the first time, a digital asset ledger is being integrated into the core of global banking infrastructure. Next, let's look at BNY Mellon, the world's largest custodian bank. They're not just testing XRP, they're actively holding tokenized deposits and integrating XRP into their reserve management system. Think about it. When a bank this big adopts XRP for real-time settlements, it validates the ledger as a professional, institution-ready system. It's not speculation, it's operational necessity. Another major player in this ecosystem is Evernorth, a NASDAQ-listed SPAC that is actively buying XRP to deploy in the XLS66 lending protocol. With $1.1 billion in committed equity financing, Evernorth isn't holding XRP for speculation. They're creating a flywheel effect. Buying XRP increases network utility, which attracts more institutional adoption, which in turn increases demand for XRP. This is the blueprint for long-term sustainable growth. Now combine this with the 42 new whale wallets holding 1 to 10 million XRP each. These whales are absorbing selling pressure, creating stability in the $1.50 range. When you mix strong institutional support, whales absorbing supply, and 500,000 new active wallets, you get a network built for exponential growth. This is not a typical retail-driven rally. It's professional, infrastructure-backed accumulation. Here's why this matters for the everyday investor. The XRP ledger is no longer just a payment network. It's becoming a programmable financial ecosystem. Through RNTB, BNY Mellon, and Evernorth, XRP now functions as a bridge between traditional finance and digital assets. Banks can settle multi-billion-dollar trades instantly, 24/7, while fintechs and market makers can leverage XLS66 for yield. This level of adoption has never been seen in crypto history. Let's simplify this. Imagine the world's financial system as a series of pipes. Traditional banks are slow and inefficient, often requiring days to settle trades. XRP is a high-speed programmable bridge connecting these pipes. With institutions like SBI Holdings in Japan, Standard Chartered in the UK, and BNY Mellon in the US all adopting XRP, we're looking at global coverage that spans continents. Even more impressive is how the ledger handles stress. Daily transactions in January 2026 reached 1.45 to 2.68 million, and the success rate was between 76% and 92%. This proves that the ledger can support massive institutional operations, not just small retail trades. It's moving from a speculative token to a critical infrastructure asset for global finance. Now let's talk strategy. Institutions aren't waiting for a price breakout, they're building the floor. XRP wallets with large holdings are being used as collateral in lending protocols, ETFs are stacking inflows, and corporate entities like Evernorth are actively deploying XRP into productive uses. This is a level of professional financial engineering that retail traders rarely witness firsthand. It's also worth noting the timing. The price dip to 1.43163 wasn't random. It's the generational entry point institutions have been waiting for. By the time retail traders panic, the smart money has already positioned itself. These are the foundations of a multi-year bull cycle, supported by real-world adoption, not tweets or hype. The Ripple National Trust Bank, BNY Mellon Custody, and Evernorth SPAC are building the infrastructure for the next financial era. Active wallets, low exchange supply, and whale accumulation show that smart money is ready and the ledger itself can handle the load. Here's a question for you, Cosmic Crew. Do you see XRP as just a speculative asset, or are you starting to understand it as a programmable financial bridge connecting global banks and markets? Comment your thoughts below. Let's discuss how this shift could reshape the next few years of crypto and finance. First up is XLS66, the XRP ledger's new lending protocol. This isn't just a small upgrade, it's a game changer. XLS66 allows XRP holders, including whales and institutions, to lend their tokens on-chain without selling them. That means they can earn passive yield while keeping their XRP exposure. Unlike Ethereum-based DeFi, which relies on risky external smart contracts, XLS66 is built directly into the ledger, reducing security risks and making it institution-ready. Think about it this way. Before XLS66, large holders had to either sell their XRP or trust a third-party platform to earn yield. Now, the ledger itself handles the rules for borrowing and lending. This makes the XRP ecosystem more predictable and reliable, which is exactly what banks and large funds are looking for. The protocol supports single asset vaults, SAVs, meaning you don't need to juggle multiple tokens or worry about counterparty risk. Next, let's discuss confidential multipurpose tokens, MPT, and the zero-knowledge privacy layers. These upgrades solve one of the biggest barriers to institutional adoption, privacy. Banks and large institutions want to use digital assets without broadcasting their entire balance sheets publicly. Zero-knowledge proofs, or ZKPs, let them prove they have the required funds or credentials without revealing sensitive information. This means regulatory compliance and security go hand in hand with privacy, a major step for professional adoption. Here's the big picture. XLS66 plus confidential MPT gives XRP a financial ecosystem that's both productive and private. Institutions can settle trades, lend, and borrow, all while maintaining control over sensitive data. This isn't hypothetical, it's already happening. The network is being stress tested with daily transactions surging to 1.45, $2.68 million, and success rates between 76% and 92%, proving it can handle real-world institutional activity. We also see how this tech benefits smaller users and retail holders. With XLS66, even non-whales can participate in lending and earn yield directly on-chain. Combined with low exchange supply and growing wallet numbers, this creates a self-reinforcing cycle. More adoption increases utility, which attracts more users, which strengthens the foundation for price growth. Let's talk about risk for a moment. While these upgrades are revolutionary, nothing is risk-free. XRP Ledger discovered a backdoor in XRPL.js in early 2026, highlighting the importance of using redundant wallets and trusted exchanges. That's why I always recommend spreading your holdings across multiple KYC-approved platforms. This way, if one platform experiences a technical issue, your liquidity remains safe. Another critical element of XRP's tech ecosystem is how it supports institutional settlement networks. Banks like Standard Chartered, SBI Holdings, and LMAX Group are using the ledger for real-time settlements, cross-border payments, and liquidity management. The combination of XLS66 lending and confidential MPT means these institutions can now use XRP as collateral, earn yield, and manage risk, all within a secure, compliant system. The adoption of these upgrades also aligns perfectly with the 500,000 new wallets and rising whale accumulation. While retail traders focus on the dip, institutions are positioning themselves with advanced tools and predictable returns. Essentially, XRP is becoming a programmable financial ecosystem, ready to host everything from lending to tokenized assets, without relying on risky third-party smart contracts. Finally, let's connect this back to price. The market often reacts to short-term price moves, but the real story is utility and adoption. The more institutions use XLS66, confidential MPT, and the ledger's privacy features, the more value is locked into the network. This creates a strong foundation for future price appreciation, even if the charts seem discouraging today. Here's a question for you, Cosmic Crew. Would you participate in on-chain lending with XLS66, or are you worried about smart contract risks? Comment below. I want to see who's thinking about earning yield on XRP while it continues to build infrastructure. Let's start with exchange reserves. As of early 2026, XRP held on centralized exchanges has dropped to just 1.7 billion tokens, a 7-year low. When supply is this tight, even moderate buying can push prices sharply upward. Think of it like a store with limited stock. As more people want it, the price naturally rises. Combine this with 500,000 new wallets and growing institutional adoption, and you get a classic supply shock scenario. Whale activity is another key signal. Between January and February 2026, we saw 42 new wallets holding 1 to 10 million XRP. These whales are absorbing retail selling pressure, especially during the $1.43, $1.63 price range. While most retail traders panic during dips, smart money quietly accumulates, positioning for long-term upside. Historically, this combination, low exchange supply plus growing whale holdings, precedes significant price moves. Now, here's why this matters for the broader market. Institutions aren't just buying XRP to hold, they're putting it to work. With XLS66 lending, whales and corporate entities like Evernorth can lend XRP, earning yield without selling. This effectively removes liquidity from circulation, strengthening the foundation for a price increase once market conditions align. Daily transaction metrics further support this. In January 2026, transactions ranged from 1.45 million to 2.68 million per day, with success rates between 76% and 92%. This proves that the ledger isn't just accumulating wallets, it's handling real-world activity at scale. The combination of high utility plus shrinking supply creates an environment where even moderate demand spikes can trigger parabolic upward moves. Institutional strategies add another layer of strength. Spot ETFs like Grayscale's XRP fund have been seeing consistent inflows despite minor short-term consolidations. Every $1 billion entering the network through ETFs has a much greater impact than the same amount entering Bitcoin due to XRP's smaller liquidity pool. This means institutional inflows have outsized influence, especially when combined with whale accumulation and low exchange reserves. Let's break this down with a simple example. Imagine a bucket of water. Normally, every new drop slightly raises the water level, but if the bucket is almost full, like XRP's limited exchange supply, each drop causes a noticeable splash. That's what could happen when buying pressure increases. The price can surge dramatically because supply is tight. The structural health of the ledger is also a key factor. Even with monthly escrow releases of 300 million XRP, institutions and whales are actively absorbing these tokens, neutralizing the supply drag. Combine that with growing utility from XLS66 and confidential MPT, and the ledger is becoming a self-reinforcing system. More adoption fuels more demand, which strengthens price potential. Another important point is that this setup is not speculative hype. While retail sentiment may be frustrated, institutions are executing calculated strategies. They're building the foundation of the next bull cycle, not chasing short-term gains. XRP's low liquidity on exchanges, rising whale wallets, and high on-chain activity all indicate that the infrastructure for major price moves is already in place. Finally, consider the timing and psychological impact. Retail traders see the price range of 1.43, 1.63, and panic. Meanwhile, smart money is accumulating, preparing for the next stage of growth. When supply is tight, utility is high, and institutions are fully positioned, even a moderate demand surge can trigger rapid parabolic price appreciation. First, let's remember the main theme. Price doesn't tell the full story. While XRP has been trading between 1.43 and 1.63, the ledger has quietly grown in wallets, whale holdings, and daily transactions. Over 7.5 million unique wallets are now active, and institutions are positioning with ETFs, custody deals, and NASDAQ-listed strategies like Evernorth. This is infrastructure-driven growth, not hype. The XRP ledger is evolving into more than a payment network. With XLS66 lending, confidential multi-purpose tokens, and zero-knowledge privacy layers, it's now a programmable financial ecosystem. Institutions can lend, borrow, and manage collateral without exposing sensitive information. Retail investors can also participate safely, earning yield directly on-chain. This is a financial system designed for scale, privacy, and compliance, bridging the gap between traditional finance and digital assets. Institutional adoption is key to XRP's future. BNY Mellon, SBI Holding, Standard Chartered, and others are not just experimenting, they're actively integrating XRP into daily operations. They're using it for instant settlements, liquidity management, and cross-border payments, reducing the reliance on slow, legacy systems. This isn't speculation, it's real-world utility that continues to grow, even if the price doesn't yet reflect it. The combination of institutional positioning, whale accumulation, and shrinking exchange reserves has created a perfect supply-demand setup. Historically, these conditions, high utility, low circulating supply, and professional accumulation, have led to parabolic price moves. Add in the fact that 500,000 new wallets are joining during price dips, and you see a network being built for long-term exponential growth. One of the most important aspects is risk management. XRP is maturing rapidly, but technical and market risks still exist. The discovery of a backdoor in XRPL.js and ongoing escrow releases show that no system is risk-free. That's why spreading assets across multiple KYC-approved exchanges and using on-chain tools like XLS66 is crucial. Professional strategies minimize risk while maximizing participation in network growth. Let's talk about the Internet of Value vision. XRP is no longer just a token. It's a global infrastructure for money, lending, and programmable finance. The convergence of RNTB, BNY Mellon custody, Evernorth, and on-chain lending shows that XRP is laying the foundation for multi-year institutional adoption. These developments are preparing the network for a new era of global finance, where transactions are instant, transparent, and efficient. The smart money is already moving. Whales are absorbing supply, institutions are integrating XRP into real-world operations, and retail adoption continues to grow. This is a self-reinforcing cycle. Adoption drives utility, utility drives demand, and demand drives long-term price growth. XRP is positioning to not just recover from the dip, but to launch into the next multi-year bull cycle. So Cosmic Crew, what's the takeaway? Don't just look at the price chart. Focus on the real indicators: wallet growth, whale accumulation, institutional adoption, technology upgrades, and exchange supply. These are the signals that predict long-term market shifts, not short-term fear and panic. Before we wrap up, here's a thought for you. XRP is not just about trading. It's about participating in the infrastructure of the future. By understanding adoption, technology, and supply, you're not just holding a token, you're holding a piece of the Internet of Value. Finally, I want to leave you with a question. Are you ready to see past the price charts and focus on network growth, institutional positioning, and real-world adoption? Comment below with your thoughts. I want to hear who's thinking like a professional investor. That's it for our 6-part deep dive into XRP. If you enjoyed this series, make sure to like, subscribe, and hit the notification bell. Check the pinned comment for links to trusted exchanges, tools, and membership options if you want to track whale activity and institutional filings in real time. Remember, Cosmic Crew. While the market focuses on short-term price swings, the smart money is building the future right now. XRP's infrastructure, adoption, and supply dynamics are setting the stage for the next chapter in digital finance. The question is, will you be ready to ride it